Good morning, good evening, and good afternoon. This is Benson B. Webb Jr., and we are here again with Weston Financial Institute, where we want peace for your finances, peace for your family, and peace for your future. And to get that said peace, you got to understand how this finance thing works. And to understand more about how finances work, you got to understand some terms. And the term we're going to talk through today is your capital gains. So, what are capital gains? Well, your capital gains point back to how much you might have made off of a certain investment, right? Let's say you invest in stocks, bonds, mutual funds, ETFs, real estate, anything like that that has a certain asset. If you buy that asset at a certain price, that will help determine how much you might have to pay back when you decide to sell that said asset. So what am I talking about? Well, for an example, let's say you wanted to buy one share of GWC stock for $10 a share. Well, let's say in the future, like a few years from now, the price has actually gone up, and now the price of that stock is at $20. Easy math probably can tell you that you've made $10 here, but if you want to get a formula here to understand your capital gain, only thing you have to do is take the amount of money you've made, which we know is $20, and subtract it from the price you paid, which we know to be $10. And you subtract the two, you get your capital gain of $10. So why is this important? Well, it gives you an idea of how much you have to pay tax on any income you've made here. But depending on how long you held that asset will determine how much tax you do pay. You have a chance to get a lower tax rate the longer you hold it. What I am basically referring to is the difference between your short-term and your long-term capital gains. So when you think of short-term capital gains, think of you selling your stock, your real estate, cryptocurrency within a year or less of you purchasing those shares. So let's say you bought stock on June 22nd of 2024. If you were to sell that stock before June 23rd, 2025, you would have to pay ordinary income tax on any money you've made. So, depending on your income status, how much money you're making, your adjusted gross income can determine that price you have to pay in your taxes. But the preferential treatment that comes from holding on to your asset for longer than a year is known as your long-term capital gains. And your long-term capital gains are going to be for any asset that you have held for more than 1 year. So it has to be like a year and a day. If you sit there at 365 days, it'll count as short term. And again, you get some preferential treatment when it comes down to your taxes. So for this to make some more sense, let's have an example here where we take a look at this graph. And this graph or this chart here gives you an idea of how much tax you will have to pay. So let's say you held a stock for 9 months, right? Well, depending on how much money you make in your job or any income you make over the year can determine how much you make or pay in those taxes. So for an example, let's say you make something around like $50,000, right? You have to pay 22% or you'll be in the 22% tax bracket, right? Well, if you think about your long-term capital gains and the value there, it becomes more apparent because let's say you made $50,000. Let's say you are making $50,000 a year at your current job. Well, if you were to make, let's say, $4,000 off of your stock that you might have held for X amount of years, well, you might have to pay less on this $4,000 because let's say you're dealing with your short-term capital gains, you would be in the, based off your AGI here, Make sure I throw my letters here for this to make sense. Based off your AGI, you would have to pay 22% on that 4K, right? But if you're thinking long term, well, if you're in the $50,000 a year tax bracket with that long term capital gain, you would have to pay how much? 15% on that $4,000 you made from your capital gains, because you get a tax rate that's better than the one you have with your short-term capital gain there. So for another example, for this to really hit home, let's say you are a CEO at a company, and let's say you bring in $1 million a year. Well, based off your $1 million salary, you will have to pay based off of your ordinary income tax. And let's say you did sell some stock that you held for, let's say, 5 months. Well, you're going to be paying about 37% just on that alone. But when you think about your long-term capital gains, guess what you get? That preferential treatment, meaning you only have to pay about 20% in taxes on any money you've made from selling your securities, your assets, whatever the case may be. So this is basically one of the ways the rich stay rich, because what they'll do is go out, buy a bunch of property, and buy assets, buy investments, and sit on them for more than a year. And when they want to take money out of it, they will sell those securities, and with that long-term capital gains, they won't pay anything more than 20% based off of how long they held those securities. There are some other taxes to be aware of. I know they have that net investment income tax that at a certain point you still have to pay about 3.8, 3.5% in tax anyway. But again, with that added on, you're still getting a better tax rate with this 20%. So with that being stated, I hope this was helpful. I hope you were all able to get something from this and kind of get an idea of how to better prepare yourself if you're looking to invest, what to look out for. Please just do not take this one video and use it as your shining light and your end all be all. You still want to learn a little bit more. You still want to do your own research. And speaking of doing your own research, you want to go somewhere where we're focused on helping you understand the world that we're in and understand the why behind your buy. Please reach out to Weston Financial Institute. Website is on the screen along with that email, info@westonfi.org. Follow us on social media. We're trying to grow that following there. And if you have any questions or anything else, please feel free to reach out. We're here to help. You all take care.